Ray Dalio, often hailed as one of the greatest investors of our time, has been sounding the alarm bells louder than ever before. His recent warnings have sent ripples through Wall Street and beyond, leaving many wondering what's in store for the global economy. Welcome back, everyone. Today, we're diving into a topic that's been sending shockwaves through the financial world, the looming economic storm, as warned by none other than Ray Dalio, the legendary investor and founder of Bridgewater Associates. Strap in, because this isn't just another market fluctuation. This could be the big one. But what exactly is Ray Dalio warning us about, and why should we take his words so seriously? To understand the magnitude of the situation, we need to delve deep into the factors at play. The global economy is facing a perfect storm of challenges, from rising debt levels and geopolitical tensions to income inequality and climate change. These factors have been brewing for years, and according to Dalio, they're reaching a tipping point. What we're witnessing is the convergence of several long-term trends, each exacerbating the other. It's a recipe for disaster if not addressed promptly. Ray Dalio's warnings are a wake-up call for policymakers and investors alike. Ignoring them could have dire consequences for all of us. Let's break down some of the key components of this economic storm. First up, debt. Global debt levels have been skyrocketing, reaching unprecedented heights. From government debt to corporate and household debt, the world is drowning in red ink. As you can see here, debt to GDP ratios have been climbing steadily, raising concerns about sustainability. If left unchecked, this debt burden could trigger a financial meltdown of epic proportions. Adding fuel to the fire is the looming threat of climate change. We've seen an increase in extreme weather events, from hurricanes and wildfires to floods and droughts. These disasters not only devastate communities, but also take a toll on the economy, costing billions in damages. The economic impacts of climate change are undeniable. If we continue on this path, the costs will only escalate, putting further strain on an already fragile system. Meanwhile, geopolitical tensions are simmering, with conflicts raging across the globe. From trade wars to territorial disputes, the geopolitical landscape is fraught with uncertainty, making it difficult for businesses to plan for the future. Ray Dalio's message resonates deeply with those who understand the intricate web of economic interdependencies. His warnings extend beyond mere speculation. They're rooted in a profound understanding of historical patterns and human behavior. Throughout history, we've seen cycles of boom and bust, each fueled by similar underlying factors: excessive debt, speculative bubbles, and systemic imbalances. From the Great Depression of the 1930s to the global financial crisis of 2008, these crises share common themes that should serve as cautionary tales. What's striking is how history seems to repeat itself. Time and again, we ignore the warning signs, only to suffer the consequences later. Ray Dalio's insights remind us that we're not immune to these patterns, no matter how advanced our financial systems may seem. But it's not just economic fundamentals at play here. Behavioral psychology also plays a significant role in shaping market dynamics. Emotions like fear and greed can drive irrational decision-making, leading to bubbles and crashes. Humans are inherently prone to cognitive biases, which can distort our perception of risk and reward. Understanding these biases is crucial for navigating turbulent markets and avoiding costly mistakes. So what can be done to avert the looming economic storm? Many argue that a proactive approach is needed, one that addresses root causes rather than just treating symptoms. Implementing sound economic policies, promoting financial literacy, and fostering international cooperation are all steps in the right direction. By tackling issues like debt sustainability, income inequality, and climate resilience head-on, we can build a more resilient and equitable economy for future generations. Experts from various fields agree that a holistic approach is necessary to navigate the challenges ahead. It's not about finding a quick fix, but rather laying the groundwork for long-term stability and prosperity. In today's interconnected world, no country is an island. What happens in one part of the world can send shockwaves throughout the global economy. That's why geopolitical stability is crucial for sustainable growth. And let's not forget about income inequality, which continues to widen at an alarming rate. While the ultra-rich amass fortunes, millions struggle to make ends meet, creating social unrest and economic instability. This growing gap between the haves and the have-nots is not only morally reprehensible, but also economically unsustainable. A healthy economy depends on a thriving middle class, and right now, that's under threat. Delving deeper into economic policy, we find a spectrum of potential solutions ranging from monetary and fiscal measures to structural reforms aimed at addressing systemic vulnerabilities. Central banks play a pivotal role in managing monetary policy, with tools like interest rate adjustments and quantitative easing at their disposal. However, prolonged low interest rates can incentivize risky behavior and inflate asset bubbles, creating instability in the long run. On the fiscal front, governments have the power to stimulate economic activity through spending initiatives and tax policies. Investing in infrastructure, education, and healthcare can not only create jobs, but also lay the groundwork for sustainable growth and social cohesion. It's crucial, though, that fiscal stimulus is targeted and well-timed to maximize its effectiveness. Balancing short-term needs with long-term fiscal sustainability is a delicate dance that policymakers must navigate with care. Beyond short-term measures, structural reforms are essential for addressing underlying issues such as income inequality and productivity stagnation. Reforms to taxation, education, and labor markets can foster innovation, boost productivity, and ensure that the benefits of economic growth are shared more equitably. Structural reforms require political will and social consensus, but the payoff can be immense. By fostering a more inclusive and dynamic economy, we can mitigate the risks of future crises and lay the foundation for sustainable prosperity. Lastly, international cooperation is critical in an increasingly interconnected world. Collaborative efforts to address issues like trade imbalances, climate change, and financial regulation can enhance global stability and resilience. In essence, Ray Dalio's last warning serves as a clarion call for action. It's a reminder that we're all stakeholders in the global economy, and our decisions today will shape tomorrow's world. The choice is ours. Will we heed the warnings of history and chart a course towards sustainability, or will we continue down a path of recklessness and regret? Now more than ever, we need to set aside differences and work together towards common goals. No single country or institution can solve these challenges alone. It's only through collective action that we can build a brighter future for all. The road ahead may be challenging, but it's not insurmountable. Together, we can build a more resilient and inclusive economy for generations to come. In conclusion, navigating the economic storm on the horizon requires a multifaceted approach that addresses both short-term pressures and long-term structural weaknesses. By implementing sound economic policies, fostering innovation, and promoting international cooperation, we can weather the storm and emerge stronger on the other side. Against this backdrop, Ray Dalio's warnings take on added significance. He's been sounding the alarm for years, urging leaders to address these systemic issues before it's too late. But are we listening? The clock is ticking, and the stakes couldn't be higher. If we fail to heed Ray Dalio's last warning, we could be facing an economic catastrophe unlike anything we've ever seen. It's time to act before it's too late. Thank you for watching.